Good morning, everyone. It's Friday, December the 19th, and welcome to 7investing Live. This is our live stream event that will be focusing on new opportunities in the stock market that we find particularly compelling and intriguing. We're going to be hosting our show every Monday, Wednesday, and Friday at 10 a.m. Eastern Time. You can always join on our YouTube channel or directly on our Twitter event. My name is Simon Erickson. I'm the founder and CEO of 7investing. This is our final show of the year. We've done a soft launch here of 7investing Live. We tried it out. You've seen me and our beloved producer, Heather Horton, talking about some of the stock opportunities. We're actually going to go ramp this up a little bit in 2026. We're starting inviting guests. We're going to start having sponsors. We're going to have affiliates. We're going to have a whole group of fun joining the live stream show again every Monday, Wednesday, and Friday, starting on January the 5th, I believe, is the first Monday of the new year. So looking forward to that. I think we're going to have a lot of fun with this. The final show we're going to have here today is actually going to be on cryptocurrencies and the collision that they are having with stocks and with equities. And we're going to be talking about Coinbase as the stock of focus for this show. But because it is the last show of the year, I think it's a good time to kind of look back on what's happened in 2025. And in fact, last night, for 7investing subscribers, every month with 7investing, we do a subscriber call where we talk about some things that are going on out there in the market. And last night we introduced the year in review, which is kind of a special one. It's one we only do at the end of the year because it focuses on all of the active recommendations that we've got across all of the sectors of the 7investing scorecard. And there's 17 different sectors. Just a little bit of a preview here that we're showing on the screen right now is alphabetically the first of those. Advertising is the first alphabetical sector that we looked at. And so we kind of walked through a couple of the things that are going on and talked about how these are impacting the stocks in each one of those sectors. And then finalizing it out with, what are the best buys and the strong buys in this sector of all the active recommendations we have? Which ones are perpetual buys? Which ones are a little bit weaker, but probably good long-term holdings? And which ones are holds or sells? And again, this is for over 100 different companies on the 7investing scorecard, broken up sector by sector. So just to kind of review a little bit of advertising, you can read this if you'd like. I won't go through it line item, but line item, kind of talk about some of the things that are going on out there, right? The Trade Desk has been the innovator of the digital advertising industry for several years. It's now trying to bypass the digital ad auctions, which could be disruptive for a lot of the structure of digital advertising out there right now. But the Trade Desk has been declining in growth. We're seeing AI get involved in the advertising space. And certainly Alphabet has been one of those companies that's not only surviving, but thriving in the shift to the AI-driven advertising world. So this is kind of some of the context that we offered in the year in review. I'd encourage you to come check this out. We are publishing it in full on Monday. We published part one last night, on the 18th of December. And we're going to have the whole thing published on the 22nd of December, which will be Monday. So come check this out. If you go to 7investing.com/subscribe, you sign up for our annual plan, you get 7 days for absolutely free. And this would be a great time to do that because you'll get the entire year in review, which sees all of our active recommendations and how we feel about every single one of them. So if nothing else, there's really no risk required for this. If you go in and 7investing is great for you, stick around for $199 a year. That's our annual rate. I feel it's a very investor-friendly rate right there. But if it's not for you, no hard feelings. Come check it out for 7 days for absolutely free. See all of the recommendations on our scorecard and check out that year in review with 17 different sectors that we've got, advertising being just one of those. We're going to shift gears for today's show, though. We're not going to talk about advertising. We're going to be talking about financial services and specifically cryptocurrencies and crypto exchanges, which are becoming a really big deal out there right now. Crypto and Bitcoin is becoming kind of, common conversation. This is becoming part of the vernacular and the language that we're talking about when we're talking about investing. But there's a collision course. This is something that isn't just you either invest in equities or you invest in crypto. You're starting to see these two worlds collide. And the exchanges that used to offer just equities or just crypto are now offering both for investors that are likely going to be interested in both. And so I think today's show is going to be an interesting one to look at that. This is a little bit of a tease, of a preview of the show of one of our very first guests, which will be featured on January the 7th, which is Spencer Randall of Crypto EQ. Crypto EQ is doing a lot of great research, similar to like what 7investing is doing for stocks. They're doing the same thing for cryptocurrencies. And we co-hosted a live event in Houston earlier this week. It was a lot of fun, downtown Houston. And, we talked about this collision course of cryptocurrencies and of equities. And we said, what are some of the most important things that are going on in this space right now? And how is that going to impact both of our fields, both of our backyards that we tend to run in? And I think one of the biggest storylines is one that I want to give a tease. We're going to talk about this more on the 7th. And mark your calendars if you do want to attend that event. Again, it's going to be 7 Investing Live, 10 a.m. on the 7th of January. But just to talk a little bit about one of the big events that's going on there, right? There's regulations. The SEC obviously regulates stock trading and equities trading, but there's also been some new proposals that are under SEC review right now from the Nasdaq, which would allow for tokenized stocks. Now, what this means is right now, you can go out there and you can buy stocks on brokerages, Nasdaq Exchange being one of those that brokerages plug into, and you can buy and trade on Nasdaq Exchange, on New York Stock Exchange, anything where equities are traded. But the Nasdaq has requested approval from the SEC, the regulatory body of stock trading, to tokenize stocks onto blockchains. And this is a pretty important deal because this kind of bypasses the traditional, you can wake up and start trading at 9:30 in the morning Eastern time, and then you have to stop at 4 o'clock, right? This is going to basically be 24/7 access. There's going to be no trading fees, transaction fees. There's going to be, a tighter bid-ask spread, and because this is all being done on a blockchain, it's going to be internationally available for anyone. And so the idea of tokenizing stocks, similar to how we put stocks and wrap them up into ETFs, and you could buy an exchange-traded fund directly over exchanges. Now you could actually buy tokenized stocks on a blockchain. And the Nasdaq is proposing this. The SEC is reviewing it right now. So this is some very interesting regulations that are being proposed and are under review by the SEC. And this, of course, would be very, very good for stock traders because it's still the same ownership of the equities just as before. You still get the voting rights just like you would before. You get the ownership of the stock. It's in your name for anything that would be traded within an ETF or within a tokenized stock. Anything that's tokenized, you still get the ownership like you would before. But it's just going to expand the pool to these giant platforms that have traditionally served crypto traders and crypto investors, now getting access to stocks as well. More money flowing into the system is very good for the exchanges, and we also think it's probably good for the entire system at large. And the stock that I want to talk about today, the company that I want to talk about today, is a publicly traded crypto exchange named Coinbase. If we could put the next chart up here for Coin, COIN is the ticker on that one, which, by the way, I hope that everyone appreciates and is able to see all the Easter eggs that I tend to put in the background of our shows. Coinbase is today's show. Let's talk about how Coinbase is now going to offer stock trading on its platform, which is kind of a big deal for the company that used to be a crypto exchange. You would go out there, you would initially buy and sell Bitcoin. It's kind of one of the first tokens you can buy and sell on Coinbase. They would get a fee of every time that you made a purchase or you sold it later on. The first time I ever bought a Bitcoin, it was $247 directly on Coinbase, and then they take a nice, pretty generous, fee every time that you're selling later on, which of course Bitcoin has done very well in recent years. So they've made a lot of money. But now Coinbase is saying, hey, we're going to come out there, Mr. and Mrs. Investor, and for all of the crypto portfolios that you have with us on Coinbase, we're now going to start offering stocks and ETFs as well. Similar like Fidelity, similar like Schwab, similar like any other brokerage that would plug into the exchanges for stock trading, for equities trading. And this is really step one of many, which I think is perfect timing as Coinbase is anticipating the SEC to approve the Nasdaq to allow the tokenization of stocks that are traded on its exchange. Because now, of course, Coinbase doesn't just want to be a stock-based brokerage. It wants to fully have everything tokenized and put onto the blockchain so that it can do what it does best. It's differentiated from other brokerages that are out there. So I think this is probably a pretty big deal because Coinbase has just been a successful ecosystem that is more than just trading. It's doing staking where you can actually earn rewards from having, portfolios on Coinbase and then lending out those assets to do other things with. It now has subscription-based analytics-based revenues, which are not just based on fees, based on transactions, but something that it's collecting on a monthly basis. It's now creating its own tokens that are proprietary, that it's trading on its own exchange out there. Coinbase has done a fantastic job of building this foundational ecosystem and then layering new things on top of it over time. In fact, we've got a cool chart to show this. If we look at Coinbase's revenues, in the early years, I say the early years, call it a decade ago, it typically was just transaction revenues. Look at the orange bars there. And you see the spikes on them because, again, the fees are tied directly to the amount that is traded. It's a percentage. It's a rake, if you will, a take rate from the total amount that is bought or sold on the platform. So when the price of Bitcoin skyrockets, as we saw in 2020 and 2021, Coinbase was printing money, right? It was just making a ton of money based on the volatility of cryptocurrency prices. We've seen that come down a little bit in recent years, but then also, kind of the resurgence in the last couple of years. And of course, Bitcoin has fallen here recently in recent months. But look at the blue charts. Look at the blue bar graphs, which are much less volatile and are steadily growing the subscription and services revenue, the other parts of the Coinbase ecosystem that are tied to cryptocurrencies. And so this exchange, yes, they're going to make a little bit of transactional revenue, not a little, they're going to make a lot of transactional revenue off of the allowing of stock trading and tokenized assets. But you can also see as this expands from being primarily a crypto exchange and services and support to support those cryptocurrencies and cryptocurrency trading, as you're going to expand this into, tokenized assets of equities. You can see how both the orange and the blue lines, bar graphs, are going to increase over time. I think that Coinbase is in a great position to capitalize on what's going on out there. And one more chart that I wanted to put up here is the correlation between Coinbase's stock price and the price of Bitcoin. It's almost a direct correlation right there, right? And that's not surprising based on the chart that we just showed. Coinbase is tied to its fundamental results, its earnings per share that it reports, the revenues that it obtains. All of the fundamentals are pretty much tied to the prices of cryptocurrencies that are being traded over its crypto exchange. You can see the price of Coinbase's stock, COIN, tied very closely to the price of Bitcoin. And look at what's happened here in the last 6 months of 2025 after a phenomenal couple of years for the price of Bitcoin in 2024 and then 2025. We've actually seen this fall by about a third, by about 33% from mid 2025 to the end of the year here in the price of Bitcoin. And of course, Coinbase's stock price has followed suit. So there's a lot of things that I like here. To recap all of them, though, I do think that there's a collision between equities trading and cryptocurrency trading. That's very important because the companies that are participating in both of those, the Nasdaq being one of those, but also Coinbase being another one of those, seem to be in a great position to capitalize on this. And as we see more and more trading volumes going over Coinbase's exchange, not just for cryptocurrencies, but also for equities, we're going to see those volumes translate into more revenues that are going to fall very quickly to the bottom line because of the company's operating leverage. And as you support that with complementary subscription and services features as well, I think that Coinbase is going to make a ton of money off of this trend and is one of the most trusted and largest crypto exchanges in the world, really in a great position to do well, not only for the business itself, but also for its investors. So COIN, once again, is a ticker for Coinbase. Again, that's the crypto exchange, but that's the publicly traded stock for Coinbase, around a $60 billion market cap right now. I think there's plenty more room for that to run as cryptocurrency goes a little bit more mainstream. You can learn more about Coinbase by directly visiting our landing page at 7investing.com/COIN. You can go to actually any stock that you're interested in by just putting in 7investing.com/ the ticker that you're interested in. Any available research we've got a good portion of that available for absolutely free. And again, if you want to take us up on our 7-day trial for our subscription, for our membership of 7 Investing, that unlocks all of your premium content for all of the stocks that we cover. And of course, all of our monthly recommendations and our monthly best buys. And here most recently, our 2025 year in review. So I encourage you to go check out 7investing.com/subscribe. Get started today. Great Christmas stocking stuffer. Great way to, participate in the equity markets. Great way now to participate in the crypto markets. Excited to follow up even more on cryptocurrencies and Coinbase on our upcoming show on January the 7th. It's going to be a good way to kick off the year as we continue 7 Investing Live here in 2026. So a huge thank you for anyone who's attended these for the last week and a half. Really a very special thank you to Heather, our producer on the other side of the glass. Heather, I will bring you in here to discuss Coinbase and talk about crypto or talk about the show or anything else you'd like to. for our final show here of the year, what's on your mind as we kind of close out 2025?
Just a reminder that if you want to ask a question, please do so. It should be in the right bar. Um, why? Okay, this might get into the weeds. Why does moving it onto the blockchain make it so you can do it 24/7? Like I understand, like because you can kind of buy stocks, but it's like once it opens, you can buy them. How is that whole system happening, and why does that available 24/7?
Yep. So it's a great question. Fantastic question. So this is the evolution of kind of how you can buy and sell stocks online. So it kind of the first move was just traditional brokerages. You would have Fidelity, you'd set up an account on Fidelity, you'd put funds into your account on Fidelity, and then you'd buy directly the stocks that were traded on the exchange. You would move them into your brokerage account. All of a sudden, great, I own Apple now. It's in my account. Amazing. We saw the next evolution with ETFs, with exchange traded funds, where now all of a sudden you weren't directly owning the ETF. That was a much larger entity, but you had a small portion of this. And then the ETF manager, either actively or passively, was controlling what stocks would go into that, right? The S&P 500 index fund, the automation and robotics Indonesia ETF, whatever it might be, whatever pocket of the market you wanted to be in, you can invest in the ETF and let them take care of everything and the trading on your behalf, but you still own those assets as part of the ETF. Now that bypasses everything that we've known because you can tokenize assets themselves, which means now on the blockchain, rather than the exchange itself, we've built these exchanges and we built brokerages that have plugged into them, the New York Stock Exchange, the Nasdaq Exchange, the Fidelity brokerages, all the Schwab, whatever it might be. You've got all this layer of doing it, in the way that we've gotten used to through the exchanges. Bypass all of that, and now you can buy a single stock that is tokenized and traded on a blockchain, which has completely different rules than the exchanges used to. So again, 24/7, maybe there's tighter spreads, in terms of the bid ask prices that you want to pay. You could trade them internationally with no fees. A lot of times if you want to buy stocks that were traded on a London exchange or, something that was in Shanghai, you'd have to pay extra fees for stuff like that. Not true with the blockchain. All of the advantages we've gotten from trading cryptocurrencies, which has been great for remittance, for transferring cash overseas, all of the things we like about blockchains could now enter the world of stock trading. Heather, I'm sorry, that was kind of a confusing, not very straightforward answer, but that's kind of what's going on with exchanges.
No, that made a lot more sense. So it's a completely different foundation than what the exchanges are using. That makes more sense to me.
That's the answer I was looking for. Thank you for saying it much better. That's exactly right.
And I would assume that the security is as good, if not even better, because I know blockchain is used as a very secure system. Is there anything there that people need to think about or worry about?
That's another good question that I think I want to discuss a little bit more in early January, because it's probably a conversation all of its own of the not only the security of the crypto exchanges, which have been hacked in the past, right? And there's really no FDIC right now that if you lose your tokens, you're out of luck. There's no insurance that says, hey, you got a bank account, with Bank of America that has $100,000 in it or whatever number you want to say, and somebody took that, we're going to make whole. We're going to make sure you've got your assets secure. If you have $100,000 in a crypto exchange or a wallet, and somebody takes those, you're out of luck right now. And so that's kind of kept a lot of people kind of on the sidelines from this. I will say Coinbase has separated itself from several others in making sure the security protocols are best in the industry out there. It is not the largest crypto exchange, but is generally considered to be one of the safest out there. And I think that has done really well for it, rewarded it with higher fees, as opposed to some of its disruptive competitors, which don't have kind of that same history, don't have that same kind of security and safety, that it's been rewarded with higher profits and higher prices. The other thing that I want to talk about, this is a little bit of a teaser question too. We won't have too much time to discuss it on today's show, but how does this factor into retirement accounts? It is one thing for people to go out and say, hey, this is cool. I want to speculate a little bit on the price of Bitcoin. I'll go buy a Bitcoin today, whatever. We'll see what happens in the next 6 months or a year or whatever. That's a very different conversation from someone who's near retirement and might have hundreds of thousands of dollars in a brokerage account that's in the retirement account, right? A 401k or a Roth IRA or something like that. And we're starting to see the managers and the fiduciaries that are responsible for those funds encouraging putting cryptocurrencies into retirement accounts. In fact, Bank of America, Merrill Lynch just advised certain of its clients to put up to 4% of assets with exposure to cryptocurrency into their retirement accounts. They say, hey, this is a big trend. This is a real deal. It's kind of a validation this market is for real. Heather, $50 trillion is in American retirement accounts. $50 trillion. I mean, just, the math alone, if you're thinking about 4% of that, think about the hundreds of billions of dollars that could go into cryptocurrencies, and why this is such a big deal, and why all of these large brokerages are kind of scrambling to make sure that they are ready as people start asking more questions and wanting to put those into their own accounts. So between the security, like you asked about, and then also the retirement aspect of this, I think there's a lot of potential, the institutional markets for crypto coming up.
That's so much money to just pour into the crypto markets.
It's mind-boggling. $40 trillion is a ton of money. Several times more than the US GDP every year.
I wonder how comfortable people will be doing that, and hopefully they'll be becoming more comfortable, but it's interesting that it's the retirement funds that they're kind of starting with.
And the regulation on this is everything, right? If you're going to invest in crypto, you cannot go out there and say, I'm going to put $200,000 in Bitcoin. And by the way, if it gets lost, oh, well, so, there's got to be, kind of that layer to protect you, the insurance layer for that, the regulatory thing to make sure people aren't getting scammed or, messed with out there. There's a lot of layers to this, but you can kind of see the trend. I mean, it wasn't more than a couple of decades ago that the Roth IRA got introduced, and then people started individually investing in stocks for their own portfolios. This is evolution of the financial markets. Cryptocurrencies will be here to stay.
Thank you for answering that. That makes a lot more sense. I'm excited.
Cool, great. So again, thank you to everybody for tuning in for 7 Investing Lives. We've had, like we mentioned, a kind of a soft launch here. Heather, I've been enjoying this. I've really enjoyed this show and looking forward to seeing where we bring it here next year. But we're going to take the rest of the year off. I hope that everybody has a great holiday season. We'll be back on that first week of January. Our next show will be on January the 5th, which will be Monday, January the 5th. Again, 10 a.m. Eastern, always exactly the same time. And then we're going to have Spencer from Crypto EQ as the special guest, our first special guest on Wednesday, January the 7th. So thanks for tuning in this year. I hope you go to 7investing.com and check out our year in review and see all of our recommendations and all of our opinions on where we stand in terms of conviction of the stocks that are on our scorecard. Thank you, Heather Horton. Thank you for doing a fantastic job with this show. All of the things that you've done on the other side of the glass. I really appreciate all of that, and looking forward to see where this goes in 2026. I hope everyone tuning in has got a wonderful holiday season planned out ahead of them. We will see you next year.